So when we've come, Ben and I were here last year talking to you guys under a different banner. And what's happened in the last year is that NPD has merged with a company called IRI, and we've become Circana. And Circana is a company that now tracks over $4 trillion in consumer spending across the globe, across 26 different industries. Ben and I cover the tech, which is one of those pieces, and that's one of those things that we're going to talk to you today about. So I'm going to start first, and we're going to go a little bit back and forth talking about some different topics that we want to inform you about. I'm going to start with kind of where we are and how we got here. We cover a lot. I just mentioned $4 trillion across 26 different industries. And when we look at how consumers are spending, we've definitely noticed a shift. Consumers are spending more money out of their wallet on things like food because prices are higher and not coming down very much. Things like food service, so going out to restaurants. Other consumable categories, a lot of consumer packaged goods products. These are all accounting for a higher share of the consumer's spend. And you know, the budget isn't infinite, the wallet is only a certain amount, and so that spending growth has to come from somewhere. And over the past year, the two product categories where we've seen the biggest decline has been technology and apparel. But when we kind of look and see what is the respective size of each of these categories, it's clear how much, especially food, and when we look at the total of consumer spend on food, both dining out, ordering pizza, buying groceries, it accounts for over 50% of the typical consumer's average budget. This is total share of total dollars spent in 12 months ending in November. And that share has gone up by over a point in the last year, and total dollars spent has increased 6% for the complete food category. There are two categories, and I already mentioned them, fashion, apparel, and technology, which has seen a decline in that share of wallet. And while that's true, a lot of these are more discretionary product categories, and consumers have to balance their budget somewhere. So this kind of gives you an indication of where that money is going. But the picture is a little bit more complex than that, and when we talk about spending being down in technology, it's not in a vacuum. You know, broadly speaking, across all of the general merchandise product categories that we cover, we have seen a decline in spending. And when we look at, all over 400 different categories of items that we track, a quarter of them experienced growth last year. That means 3/4 of them did not. And so in the broader context, consumers have pulled back largely on a lot of different general merchandise categories. There are a few categories, roughly about a quarter, that experienced the dollar growth, about 16% of which experienced both unit and dollar growth, which really is kind of a signal of true demand growth, and that represents about 20% of all general merchandise sales in 2023. Now, why am I telling you about that? I want to give you some context. So let's look at this same kind of data, but for the technology category specifically. It's been a tough year. I don't have to share that with the industry. Sales have been down, generally speaking. About 14 out of the 115 different categories of technology products that we track have seen both unit and dollar growth. And that is not a lot. That represents about 5% of all sales in the 3 months ending in November, heading into the holiday season. But there are signs of growth within that. We have seen product categories that have had new product introductions, like VR headsets, for example, this holiday season. Or product categories where prices have fallen and consumers are pulling the trigger on those purchases, things like PC memory or solid state drives. And then there are categories which are seeing both unit and dollar growth because there's been some innovation, or the product has been improved and it's triggering consumers to start replacing some of those products. Things like digital still cameras have seen both unit and dollar growth leading into the holiday season this year. So broadly speaking, yes, the big heavyweight categories have seen some decline, but there are pockets of growth within this. Also, the thing that we need to consider is how are these products being sold to consumers? And Circana tracks promotional data at a very fine granular level. And when we look at the strategy in third quarter, and we're going to wait for the fourth quarter data coming out here in about a month or so, what we've seen is that brands and retailers haven't really changed promotional strategy. The number of units that are typically sold on promotion, just under 30%, and that's up a little bit from last year. And the average amount of the discount for those products sold is 21%, and that's down a little bit from last year. So largely unchanged. There has not been a lot of spending on deep discounting prior to this holiday season. And that's probably a smart thing, because we've also observed that consumers aren't responding significantly to those promotions so far this year. Mainly what we see is that they're waiting for those key sale periods to make those purchases. And the biggest key sale period of the year for technology is the holiday season, and that's when we started to see some discounting pick up. So we're here just after the holiday season has finished. We want to share some of the results and insights that we learned from the holiday season this year with you. First, we did some research prior to the holiday season, and a couple things consumers indicated to us were that they were going to start shopping later this year during the holiday season. They were going to finish later. Christmas fell on a Monday, so they had a whole extra weekend to do shopping. So we knew that that balance was going to shift toward the second half of the holiday season. You know, tech category products, along with a lot of other general merchandise category products, saw declines in spending this holiday season. But we joke because we talk with a lot of our other analyst friends covering these other categories, and there's a category called prestige beauty, very expensive beauty products, that have been selling extremely well for over a year now, despite the economy. And part of that is people going out, spending more money on experiences and travel, concerts, and buying these products to look and feel good as they go outside the home. But they're also very good at targeting new audiences. So not just changing the products, but actually changing the audiences that they try to attract with those products. And I think that's a good lesson for the tech industry. Technology promotions generally worked well for some step-up product categories. And you know, we talk a lot about discounting during the holiday season, but there were some product categories with products that were priced well above the average price for that category that sold well with good targeted promotional discounts. So when we say value, we're not just talking about the cheapest products, we're talking about good products at good prices that encourage consumers to start upgrading their devices. And then finally, we can't look at all consumers the same. There are very important and significant differences between different demographic groups. Most specifically as it relates to income levels. We see growth in tech spending for consumers who earn over $100,000 of income. Generally speaking, those are older consumers, over 50. Younger consumers are far more impacted by things like budget constraints due to lower income and earning, and by the way, having to pay back things like student loans. And so they're far more price sensitive and price conscious, and they're the ones who've done the most pullback over the last year. And we saw that as well during the holiday season. I'm gonna share with you a couple of the key categories. These are categories that account for the bulk of dollar sales during the holiday season. I wish I had great news to report to you about strong sales growth. I think when we get the final data in for the holiday season, we'll find that total sales were down about mid-single digits or so versus the holiday season a year ago. But it was better late in the season. So when we looked at the sales pattern, sales prior to Black Friday were nowhere near as good as they were after Black Friday. So again, this resonates very well with what we learned in that consumer research, that consumers were waiting for later in the season to pull the trigger, and then those promotions found a consumer willing to buy. The TV category, which is the largest of all the different categories we track for tech, was down about 9%. Consumers have really focused on the under $500 price segment, but we did see growth in some very important areas. For example, the 75-inch and larger TV market. A lot of the TVs that you're hearing about today in press conferences are big TVs. Sales of those increased almost 20% versus last year. So there is interesting growth in important categories. Computer category was down about 4%, and the interesting story there is that units are down, but ASPs are up. Consumers are buying better, more expensive PCs this year than they did last year. And as I mentioned, we're also seeing growth in some kind of PC accessory categories like CPUs, memory, solid state drives, those sorts of things. In the portable audio category, predominantly stereo headphones, we saw some deep discounting on the over-the-ear headband style headphones that were very premium priced. Those drove great sales volume growth. Fortunately, it wasn't quite enough to offset decline in the true wireless category, so a bit of a mix shift in that portable audio. In the home audio, soundbars are the main driver, and soundbar unit sales were up, but dollars were down because there was a lot of ASP price compression. Party speakers is an interesting category that did actually see pretty strong dollar growth because of an increase in ASPs. In the handheld category, which is mainly tablets, that category saw good sales on Black Friday proper and a couple very specific promotions prior to that. But broadly speaking, there wasn't a lot of demand outside of those peak promotional periods. And consumers really didn't feel, I think, that they could pull the trigger on a new device that's somewhat similar to a device they may have already owned. So they're just waiting for a great discount on a similar product that they already owned. And then finally, in the multimedia category, PC monitor sales increased this holiday season. Unfortunately, it didn't increase enough to offset a decline in sales of projectors. So we talk about big broadline numbers being down, but there are pockets of growth within the category. And Ben's going to talk a little bit more about what we're seeing from a consumer demographic standpoint, and we'll talk about some other ways that we can navigate the consumer market. So Ben, I'll hand it over to you.
Thanks, Paul. So Paul's painted a picture of a very challenging market, consumers under duress, maybe a little bit of a lack of innovation here and there. Let's dig a little bit deeper into what exactly we're seeing. We're all in the technology industry in some way, and one thing that we can all agree on is there is a focus on early adopters, and generally that's a proxy for younger consumers. Why are younger consumers important? They're the first, digital native generation to come up. They're very familiar with technology, much more so than previous generations. They're entering the workforce, so changing the way that we are accessing and leveraging technology at work. Of course, they're the consumers of the future, but they are technology's early adopter. They are our principal consumers. They're the ones that are leading the rest of the generations into new technology spaces. But as Paul just talked about, we're seeing challenges with respect to consumers' ability to spend, ability to invest in consumer technology, and that really comes clear when we dig a little bit deeper into our data. We look at the next slide that we have here. On the left side, what we're looking at is the aggregated spending of millennials and Gen Zs for consumer technology on a 12-month basis. And in those purple columns, you can see that spending in that group on a 12-month basis really hit crescendo at $48 billion. That's for the 12 months between April 2020 and March 2021. A couple things going on then. How can we forget that period of time? And as we've gone through these 3 years, our most recent 12 months of spending for this demographic shows that they're now spending $36 billion, a decline of about 25%. Now, when you think back to that 2020, 2021 time frame, these younger consumers had some government stimulus available to them. They were facing a job market that was probably a little bit more stable for that demographic than perhaps it is now. So that's to say that there were fewer economic headwinds facing these consumers, and people were spending on technology. Technology prices were lower at that point in time. But as we've gone through the myriad of challenges that all consumers have faced, we've experienced significant price increases in consumer technology, and we've gotten to this point where the spending power of those millennials and Gen Z consumers has declined. When we look at their spending as a share of total spending on the right side, you can see that as a percentage, spending amongst the under 34 age group has gone from 28% down to 24%. 4 percentage points doesn't seem like a lot, but in the context of the $170 billion consumer technology industry, it accounts for a lot of dollars. What demographic has grown in that time frame? Well, Paul mentioned it earlier, is older consumers, 55 plus, 45 plus, which actually taken a lot of that slack left by the younger consumers. These consumers are probably a little bit more economically comfortable, right? More comfortable job position. Many of them took advantage of low interest rates in 2021 to either refinance or buy new homes. And I think the other piece of that is many of them skipped ahead to current technology generations, maybe going from simple HD TVs to 4K or OLED, investing in some of the voice speakers. So I think they played a little bit of catch up during that time with the funds that were available to those consumers to spend on technology and taking advantage of the relatively low cost of technology at that time, at least relative to now. When we think about what the millennials and Gen Z consumers are spending more on, we think about the average spending. So the average spend per buyer for each of these categories, we see that on the top, where spending is increased, detachable lens cameras, notebook PCs, camcorders, graphic cards. There are a couple of trends that we can pull out of this, right? One is that gaming is very important to these consumers. They're investing in gaming. When there's a new gaming platform or new games coming out, they're spending their money to access those. Another thing that I'm pulling from this is interest in digital creation. Using tools like cameras, camcorders, of course, headphones to make digital content, which we know is really, really important to this demographic, and probably something we're going to hear more about this week. Where are these consumers spending less? Again, on an average basis, products like TVs, sound bars, and that's a function of consumers maybe trading down in some of those categories. Maybe it's the promotions. But we do know that younger consumers are very attached to their mobile devices and tend to own TVs and soundbars in a little less quantity. Routers, typically products that people buy new when they have to upgrade their old one when it breaks. Can you go back to the previous slide? And then the last two on there, where millennials and Gen Z are spending less, streaming speakers and VR headsets. These are not mature categories, these are innovative categories, but we've seen a couple of gaps in terms of their innovation cycle. VR, AR headsets just got updated in the past several weeks, and so spending on those previous products had lagged some of these new products. So these consumers are spending less on those products. And maybe one other point to make here with respect to streaming speakers in that innovation question is we're going to hear a lot about AI this week. Things like generative AI, chat GPT. What does that do to a voice speaker, a smart speaker? How does that change how consumers are using it? So in some ways, especially on these last two, streaming speakers and VR headsets, it's really dependent on the generation of the technology that's coming around. And as we see these products kind of develop and gain new features, we'll expect to see spending return on those products, with spending grow. We're also looking at how different income groups are spending on technology. So what we're looking at here is some data from Circana's checkout service, where we're actually able to pull demographics from consumer shopping. And what we're looking at is on the top, categories where each of these income groups are spending more, and on the bottom, where they are spending less, the major categories where they're spending less. And there are a couple of trends that we can pull out of this slide as well. For that under 50,000 group, products like drones, remote controllers, car stereo speakers are the categories that they're spending more on. What are they spending less on? VR AR headsets, graphic cards, smart displays. So as a group, this group of under 50 consumers are spending less on some of those more innovative products again, and we're waiting for the innovation cycle to come back around for a refresh. When we look at the middle income group, the 50 to 100,000, again, we see a couple commonalities. They're spending 72% more on digital point and shoot cameras. I didn't think I'd ever get on stage and say that spending on digital cameras would be up 72%, but here we are. And that is absolutely the effect of consumers continuing to travel. That's one of the bright spots in our economy. And again, this idea of digital creators taking hold amongst consumers. Where these guys are spending less, things like smart displays, again, VR headsets and PC headsets. And then when we get to the upper income consumers, those that are spending the most on consumer technology, higher spending on lenses, filters, and adapters, again, digital imaging accessories, baby monitors, item trackers, which are a new category of consumer technology product. Where they're spending less, again, some of those same categories, desktop computers, graphic cards, AR, VR headsets, and smart displays. So what we can gather from this slide is, one, there is a rebirth in digital imaging, again, attached to things like travel and digital creation. And two, that there are gaps in spending on some of these newer categories as consumers wait for the next edition of those products to come around.
All right, this is me. So we're going to talk a little bit about, differentiation, not just with the consumer like Ben was referring to, but also around regions, right? Countries and even very fine granular detail. We track spending for technology across all of North America, so that includes the US, Canada, and Mexico. And broadly speaking, across all of North America, year to date, and this data is through November, spending was down about 10% this year on tech. The US accounts for about 90% of all of the spending around North America, and the US and Canada have very similar spending profiles. But I want to call out Mexico. Mexico has seen quite a bit of growth, and they're only down 1% year over year in total tech spending. And that's a very different trend than what we're seeing in these other two countries. And it's important, I think, when we consider how to address markets and where to sell our products, that we think a little bit wider scope, so that we can understand there are opportunities available in other countries. I put this chart together to kind of show where we were before the pandemic and where we are now in total dollars spent. And I've indexed 12-month rolling periods against 2019. And it really stands out how much Mexico grew and stayed high after the pandemic, after the US and the Canada markets have come down. And when you think about the economy in Mexico, a lot of install base for a lot of technology products is still relatively low in Mexico. Income growth has been improving as a lot of manufacturers are investing in new industries in Mexico. So low unemployment, wage growth, under-penetrated market for a lot of technology products represents a sustained opportunity. And so when we apply that mindset, when we look at our products and where to sell them, think a little bit global when you do. But you also have to think local as well. And when we track our data, actually Circana tracks data at a country level, at a region level, but also at a state level, at a DMA level, even down to an individual retailer's store door level. And we see changes and differences even within our own country here in the US. Spending has fallen more significantly along the coasts and actually isn't off that much in the middle portions of the country. And when you think about why that might be, think about what are the things impinging on a consumer's ability to spend. It's higher housing costs, higher energy prices, and those predominantly affect the coastal and urban cities, and has been less of an impact on some of those interior and rural regions, smaller cities, that sort of thing. I looked at some of the DMA data and I was really interested to see that TV sales growth in a city like Laredo, Texas are up 15%. And oh, by the way, they're also one of the highest per capita purchasers of TVs. So there are examples, if you look finely enough, where you can find a consumer who's willing to spend, and so why not push on an open door, right? There are examples of that all across the country. So we really tend not to try to look at a holistic vision of sales across the country. We really do need to start looking at some of the details as well. I'm going to hand it back over to Ben, who's going to talk a little bit about innovation. This is a show about innovation, and a little bit about what's happening at retail.
That's right. We're at the home of innovation, CES. One of the ways that we track innovation through our data is looking at how many new products are coming onto the market. So what's selling today that wasn't selling yesterday? And since we've got this complete consumer view, we're able to look at this across industries. So what we're looking at here is the percent of new items as a share of total items in each of these industries. And as you can see on the left side, technology has had a pretty stark decline over the last year, going from 16.8%, about 17%, down to about 13%. So new products account for about 13% now of the total items that are on sale in technology, down from about 18% in 2021. That is roughly on par with some of the other industries that we're tracking. And if we think about what's driving this, certainly we've been through a very volatile time frame, through the pandemic and lockdowns. Companies were dealing with logistics issues, being able to get products through the supply chain and into consumers' hands and onto retailer shelves. All of those challenges have led to this. Companies not being able to get together in person to work together. All of that feeds into the dearth of new products on the market. And that is something, of course, that's